You talked about, another concept that I've heard you talk about, and I'm hoping that you'll spend a couple minutes talking about profits interests. Do you mind sharing with us what that is and how that might work for somebody?
Right. So profits interest is the number one article that gets pulled down from the website. And we're called frequently by other attorneys, by other financial advisors, from CFOs, from board members about profits interests. And what profits interests are is a type of equity, which is upside equity, that you don't have to pay anything for. It is granted to you. It's only available inside of an LLC taxed as a partnership. So if you're an LLC taxed as an S corporation, it doesn't work.
Okay.
We talk about that there's three ways of transferring value in a privately held business: sell, pay, convey. You can sell ownership to a key executive, such as stock, restricted stock. You can pay it to them as compensation. So you give it to them, and then they pay tax on that compensation amount. Or convey it, which is to give value to an executive at no cost to them. That's what a profits interest is. So you are giving the upside of an amount. So if you have a business that's worth $10 million, the threshold value is $10 million, and you can't use any discount for minority interest.
Okay.
Someone who has a 5% profits interest, when the business goes from 10 million to 30 million, it's gone up $20 million. 5% of $20 million is $1 million.
Okay.
They can sell that. And Michael, do you think it's taxed at ordinary income or capital gain?
Capital gain.
It is taxed as capital gain. You get it right. You get 5 points for that.
Thank you.
But it's probably the only type of equity that you didn't pay anything for.
And it's wow.
But it's property.
Okay.
Profits interests are mostly used in self-liquidating situations. What do I mean by that? People that are doing real estate partnerships, that it's going to be you're building a real estate strip mall, and you're gonna sell it in 3 to 5 to 7 years.
Okay.
You might give profits interest to the people that are helping to go build this, and 3 to 5 to 7 years, once the whole thing sells, then it'll pay out as a capital gain. Alternatively, you can use it as a junior partner role. So you get profits interest, you get your value up to it, and then you convert it from profits interest to capital interest, which is Class A shares, if you will. And Michael, when you do the conversion from profits interest to capital interest, do you think it's a taxable event?
I would think that would make sense. You're changing control, changing the type. So you're saying I'm assuming it's not.
It's not a taxable event.
Okay.
You can take that $1 million value and now contribute it to the company and get your $1 million of capital interest.
Love it.
So it plays a lot of key roles. We have used profits interest in many situations, and they are complicated animals because you have so much flexibility in how you put things together. But when you are trying to use a convey strategy,
yep,
profits interest is a great approach.